Hello, good morning to all. Welcome to today's Daily Dose of Market Insights by OANDA. I'm Kelvin Wong here, the Senior Market Analyst of OANDA Asia Pacific. Very good morning. Today will be Wednesday, the 10th of January 2024. So before we start, as usual, let's take a look at the disclaimer slides first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so as usual, before we jump into the short-term technical outlook for today on the cross asset classes, that means ranging from the benchmark the benchmark US indices, as well as the other indices in the region from Europe to Asia, the major FX pairs, and gold and WTI crude. Let's have a recap on key events that took shape yesterday, and as well as the performance of the cross asset classes. So let's start with the performance of the cross asset classes first. So yesterday is a rather, I would say, it's a kind of a lackluster session. More like in terms of the major benchmark US stock indices, we see a bit of retracement after Tuesday's strong push up across the board. So yesterday, there was some signs of, we call it positive consolidation in terms of the movement. Why? Because if you look at the current situation over here in terms of the S&P 500 heat map, okay, so what we could see over here is that we start to see a strong outperformance on the mega cap 7 stocks. That means those stocks that have high weightage in the Nasdaq 100 especially. So with that, the Nasdaq 100 actually outperformed yesterday among the major US stock indices, positive 0.17%, while the SPX 500 almost unchanged, negative 0.15%. The Dow Jones and the Russell underperformed, negative 0.4%, and the Russell 2000 negative 1%. Yeah, almost down negative 1%. Why? Because we see a slew of underperformance in the energy sector, as well as some weakness on the financials ahead of the Q4 earnings reporting season. They're going to kickstart this Friday before the start of the US session with the major US banks and financial service provider like BlackRock, JP Morgan, Bank of America, Wells Fargo, and Citigroup. So we'll talk more on about that on Friday Daily Dose of Market Insights. All right. Now, and other cross asset classes performance, we see gold almost unchanged, and WTI crude continue to swing wildly across to actually play around the 20-day moving average. So yesterday, WTI crude or West Texas oil Bitcoin and platform managed to inch up 1.8%. So right now, the bulls and bears in short term are fighting against this potential slower economic growth globally, and as well as supply disruption due to this ongoing geopolitical tension around the Red Sea, and as well as this ongoing Israel and Hamas conflict that has yet to be settled. All right, then for this dollar, so dollar yesterday was also rather mixed, with the dollar index managed to actually inch up slightly higher at 0.2%, but still remains below a resistance level. And what's interesting over here is in terms of global liquidity condition, it's still remaining more on the loosening side of the narrative rather than tightening side of the narrative. Why? Because if you look at the 10-year benchmark as one of the gauge of global liquidity condition, so if I were to share the screen over here, okay, so if you look at this is the dollar. Okay, this is a dollar index. It's still floating below the 20-day moving average and right below this resistance at 102.50 that I mentioned earlier. Now, the one of the gauge of global liquidity condition is the 10-year US Treasury yield. So you look at the 10-year US Treasury yield yesterday, it still managed to actually inch down lower. It actually, yeah, with a bearish candlestick. All right, bearish candlestick over here, still right below the 200-day moving average, as well as the key intermediate resistance at 4.06%. All right, so net, as long as it remains below this 4.06%, potentially in the short term, we could still start to see a bit of easing off of liquidity condition coming back into the market. So that is still supporting that short-term bullish outlook on the major US indices and across the rest of the world, except for Hong Kong and China stock. Why? Because they are still grapple with this ongoing risk of deflationary risk spiral. That's the kind of an outlier right now. And yeah, before I jump into that, I want to highlight Nikkei 225. So the Japan 225 today actually broke above this early at the start this morning. It broke above its 7-month range configuration and hit a fresh 34-year high on the Nikkei 225. And from a year-to-date performance basis, it's actually now up. Year-to-date, that means we're talking about year-to-date. That means so far in the current 2 weeks of 2024, it's actually now outperformed the benchmark US stock indices as well. So something to take a look out for. So I've been mentioning this Nikkei 225 for quite some time. For those who actually followed our other, we call it market talk hosted by OANDA, premium event. So this is one of my core major stock indices outperformance last year, and it's going to continue to play out this year as well on the Japan 225, on the Nikkei 225. All right. So before we jump into our short-term technical outlook, one key news event that I'll highlight to you all is this World Bank. So World Bank over here yesterday, it did mention that it expect kind of a lackluster global growth. They call it rich run for post-pandemic global growth. So what they actually forecast in the 4 year from 2020, that means post-pandemic, 2020. Let me expand my screen so you guys can see clearer. Okay, so from 2020 all the way to 2024 this year, okay, they're expecting global growth to grow at 2.2%. So that's the lowest 4-year global growth since 1990 to 1994 at 2.1% initially. So what it did across the board over here, if you look down this news report, it did mention that the US economy will slow from 2.5% last year to 1.6%. China will grow from 5.2% last year to 4.5%, and global inflation will slow down to 3.4% to 3.7% this year. So all in all, right, what we are seeing right now is number one, demand and cost push inflation will start to take off. Potentially, we start to see a bit of growth deceleration in terms of US economy as well. With still a bit of risk of what you call it, recessionary backdrop is either whether shallow or deep. But all in all, right, that actually supports a potential Fed dovish pivot this year in 2024. So, i.e., it could be give us another form of further liquidity easing condition, which potentially could also see encouraging move to actually continue this major broad-based uptrend that is still intact in the major US indices, and as well as across the major benchmark stock indices across the world, with the exception of China and Hang Seng Index. All right. So all in all, right, if you look at the situation right now over here, is still supporting further liquidity easing to come this year. All right. Now, straight now jump to the benchmark stock indices. First, for the short-term technical outlook. Okay, so let us start with the Nikkei 225 first. So the Nikkei 225. Okay, before that, let me expand my screen so that you guys could see much clearer. Okay, so this Nikkei 225, this is the cash index on Nikkei 225. So what we could see over here is very clearly it actually broke out from this 7-month range that is in place since June 2023. And right now it's actually en route to the top of this channel, ascending channel that is in place since 4th January last year. So the top of the ascending channel correspond to a Fibo extension level at 36,600 level. So this is more of a multi-month up move, since it's a daily chart of the Nikkei 225. And also the daily RSI is also supporting further upside as well, with a bullish momentum reading condition that is still intact after the retest of a parallel pullback support on 8th of December last year, and hasn't even hit the overbought region yet. Okay, so all in all, net, that means from a multi-month perspective, the Nikkei 225 is now undergoing a start of a new major uptrend phase, with the first resistance to watch at 36,600. Above it will actually retest the all-time high that was seen in December 1989. So that's close to about 35 to 36 years ago at 38,957. Okay, but first step, 36,600 first. And bear in mind, this is a daily chart. So it will be more like a multi-month trajectory. Okay, so what's in store for the daily time frame? That means the intraday movement, the short-term bullish bias. We're talking about 1 to 3 days. So for 1 to 3 days perspective, we need to look at the hourly chart. So going to our Japan 225 that we call in our platform. So yesterday, right, we do have a bearish bias to see at least a pullback towards the 33,540. So price action almost hit at 33,540 with a low printed on 33,618 during the US session yesterday, at the start of US session. Then thereafter, it starts to pull back and shape that magnificent rally. Yeah. All right. So all in all, right now, right, the hourly RSI has now flirted back to the overbought level. So potentially we could see a bit of pullback coming into play. So over here, I do not want to use the start. This is the start of the Asia session open. All right, means today Asia session is open. I don't want to use the Asia session open low as my key short-term pivotal support. So I'd rather use this as a potential pullback level. So as long as this pullback level didn't surpass below 33,960 slash 33,825, which is this range resistance former swing high now turns into a pullback support level. So as long as this ongoing potential minor pullback that could be in store right now because of the extreme overbought level that is seen in the hourly RSI. So as long as this pullback didn't surpass below 33,960 slash 33,825, potentially we could start to see further potential upside towards the next resistance with the Fibo target coming in at 34,550 slash 34,775. 34,775. All right. So all in all, right, that could be the next resistance level to watch, 34,550, 34,775 after a minor corrective pullback that is pretty much imminent right now because of this overstretch condition on the hourly RSI. So net overall flip to a back to a bullish bias on the Japan 225 with 33,960 slash 33,825 as a short-term pivotal support. Only an hourly close below 33,825 will invalidate this bullish outlook. That means, i.e., we will start to this strong push up at the start of today will be a failure bullish breakout to see another round of choppy down move to test the support level at 33,540 slash followed by 33,310 level, which is confluencing with the upward sloping 20-day moving average. Right. So then what's in store for the Hang Seng Index or the Hong Kong 33? So no change. Hong Kong 33 now starts to be remains rather weak during the across the board over here, but we could see. Okay, so due to the fact that we start to see a rather lackluster movement again across the Hang Seng benchmark indices and as well as the China CSI 300. Okay, so 16,100 will be the pivotal support level to watch again for today. So no change. First resistance will be the 16,500 level, which is the 20-day moving average that's acting as a resistance as well. That's conversing with the former congestion swing low area of 5th of Jan and 4th of Jan now turns into a pullback resistance. All right. So still maintaining that bullish bias as long as 16,100 holds, but in first step, we should be watching the 16,500 resistance first. Okay, that is conferencing with two different technical elements pointing to at 16,500. However, an hourly close below 16,100 will invalidate this short-term bullish, we call it corrective bounce scenario, to see a further slide towards the next support level at 15,500. Okay, so that's for the Hong Kong 33. German 30. So German 30 over here is that yesterday price action managed to help at the 16,610 level, 16,610 short-term pivotal support. So this support level is indeed crucial to maintain our bullish bias again for today, with the first resistance to watch out for will be 16,790 in the first step. Only an hourly close below 16,610 will invalidate our short-term bullish bias for today to see another slide to retest last Friday's swing low at 16,440. So still no change, still maintaining that short-term bullish outlook on the German 30 using 16,610 as my short-term pivotal support for today. US indices. So for US indices, as I mentioned earlier at the start of today daily dose, the Nasdaq 100 outperformed. So no surprise, yesterday it managed to came down, hit this pullback support, rebound, and shape a higher high. Okay, higher high over here. So with that, right, given that it already shaped a higher high and the strong rebound off from yesterday's price action and managed to reintegrate back above the upward sloping 20-day moving average. So with that, I'll be using a Titan key short-term pivotal support for today, which is at 16,500 level. Yeah, 16,500 level. So 16,500 level will be my Titan key short-term pivotal support on the US Nasdaq 100 for today over here. So as long as 16,500 levels holds, potentially the Nasdaq 100 could see a further tick up to test the intermediate resistance at 16,800. A break above it sees a retest of the current all-time high level, swing high level at 16,990. Okay, only a breakdown below 16,500 will start to see a kind of a choppy minor corrective decline movement to retest the support level that was previously a pivotal support on yesterday at 16,400 range level. So this is the pretty much a minor former congestion resistance level turns to a pullback support level. So given the fact that it started to shape rather positive element, higher high, bounce off 1600 and managed to actually flirt around, reintegrate above the 20-day moving average. So we will have a Titan key short-term pivotal support for today, maintain that bullish bias, 16,500, resistance to watch 16,800, followed by 16,990. So that's for the Nasdaq 100. Lastly, US Wall Street 30, Dow Jones Industrial Average. So no change, price action managed to survive the pullback, which is right at the 37,380 short-term pivotal support that we highlighted yesterday, also confluencing with the upward sloping 20-day moving average. So for sure, this is indeed a short-term pivotal support level to watch to maintain our short-term bullish outlook. First resistance level, the current swing all-time swing high area at 37,800. So still maintaining that short-term bullish outlook on the US Wall Street 30, as long as 36,380 short-term pivotal support holds for today. An hourly close below this 37,380 invalidates the bullish scenario to see the start of another leg of minor corrective decline to test the next support level at 36,170, which is the minor swing low area of 15th of December and 21st of December. Okay, so that sum up for the benchmark US, the across the global benchmark stock indices. So still maintaining that short-term bullish outlook across the board. Okay, now moving on, next will be the FX market. So over the FX market, let's start with the European currency first. So European currency, no change. Yesterday was kind of a sideways below 110 level and holding above the 108 short-term pivotal support for the euro dollar. So for sure, these are the two support level to watch. So it's more like a range situation right now. So as long as 1.0890 holds for the euro dollar for today, potentially we may start to see a retest of the top of the range at 110 level. Only hourly close below 1.0890 will start to see a minor corrective pullback scenario towards 1.0820, which confluencing with the upward sloping medium-term ascending channel support level that is in place since 4th of October 2023 low. Sterling dollar. So for the sterling dollar managed to actually hold above the 20-day moving average. So no change. Is a bit like a sideways movement as well. So as long as 126.50 short-term pivotal support holds for today, potentially we could see the test again of the top of the range. The minor range resistance at 1.2760. Only an hourly close below 126.50 will invalidate this bullish tone on the sterling dollar to see another round of minor corrective decline towards 126 figure level in first step. All right, so 126 figure level confluencing with the swing low of 3rd of January as well as last Friday's swing low, and previously the minor range resistance of 8th of December and 12th December now acting as a pullback support level at 126 figure level. Okay, moving on to the Asia Pacific majors over here. Let's start with the Aussie dollar. So Aussie dollar, no change. Price actually managed to stage a bounce at the 66.70 short-term pivotal support level that we highlighted yesterday. And it will be like a range configuration as well. So as long as this level holds, potentially we may see a test up towards the top of the range. So let's put the top of the range over here slightly. So range now over here. Okay, at 67.50/67.70 level. Okay, So as long as 66.70 holds, potentially you may see a retest at the top of this minor range resistance at 67.50/67.70. Only an hourly close below 66.70 will invalidate this bullish outlook on the Aussie dollar to kickstart another round of minor corrective decline to test the next support level or to expose the next support level at 66 figures/65.70, which confluence with the upward sloping 50-day moving average, the 200-day moving average, and as well as the minor ascending trend line support from the low of 26th of October 2023. So net still maintaining that short-term bullish outlook on the Aussie dollar. Now, dollar yen. So dollar yen, we see a bit of a squeeze up yesterday over here, and right now it's playing with our Titan short-term pivotal support level, resistance level, pardon me, pivotal Titan pivotal resistance level at 144.90. So as long as 144.90 is being surpassed, that means there's no clear hourly close above 144.90. Potentially, with that dollar yen could still maintaining that short-term bearish outlook on the dollar yen. All right, with the next support level, with the intermediate support level to watch will be at 143.45 for today. Only an hourly close below 143.45 could potentially see a much more pronounced bearish bias towards the next support level at 142.20. So this 143.45 also confluence with the 20-day and the 200-day moving average as well. So making it like a key short-term or near-term inflection level on the downside. So still maintaining that short-term bullish outlook on the dollar yen using the Titan key short-term pivotal resistance at 144.90. But however, if we start to see an hourly close above 144.90, then this short-term bearish bias will be invalidated to see a squeeze up to retest the key medium-term resistance at 146.70, which converging with the downward sloping 50-day moving average for the dollar yen. Okay, so that's pretty much sum up for the major FX pairs. So net all in all, we still see dollar strength holding on below several key short-term resistance level. Now before we go to WTI code, dollar gold. So gold was actually sideways yesterday, still holding above the 2015/2000 short-term pivotal support level, that's gold XAU/USD. So still maintaining this short-term bullish outlook on gold, but price action for sure got to surpass 2038 that was tested yesterday. So this 2038 level also confluencing with the 20-day moving average, now acting as a near-term resistance as well. A break above 2038 potentially could see further potential impulses in terms of the bullish tone to at least retest last Friday's swing high area at 2060 in the first step. Only an hourly close below 2000 short-term pivotal support will invalidate this short-term bullish outlook to see another round of minor corrective decline towards 1990/1975 level for spot gold. So then for WTI crude, so WTI crude, another move of wild swing yesterday. Price action indeed try to actually retest the low of the start of the low of this week, which confluencing with last Wednesday swing low at 69.70, and now trying to actually play around and surpass the 20-day moving average again. So you see a lot of volatile movement around the 20-day moving average since late December last year. Okay, this wild swing. So with that, right, I'll be using this swing low here. That means for sure this is a short-term support level for today's 69.70 short-term pivotal support level, flipping to a bullish bias at least in the short term to see a minor corrective bounce back up towards this intermediate resistance here. And this is a key intermediate resistance. Why? Because it's confluencing with 74.95/76.05, the downward sloping 50-day moving average, as well as the December swing high area, December swing high, 27 December swing high at 76.05. All right, only an hourly close below 69.70 will actually start to see a further push down to test the medium term support level at 67.55/67. So this level is important. Why? Because why is it a medium term support level? If I go to the daily chart, is in fact this swing high area here of May last year, and as well as June and July, that came down and kickstart the previous major uptrend phase, okay, from June all the way to 28th of September last year. Okay, so these are the key levels to watch on the West Texas crude oil, but flipping to a short-term bullish bias for a minor corrective bounce for today on West Texas oil. Okay, so that's sum up for the short-term technical outlook for today. So very quickly, let's go to the economic calendar to see what are the key data to look out for throughout today's session. So throughout today's session, today Wednesday, so there will be a ECB official speech later at 4:30 p.m. Singapore time. All right, ECB speech. So throughout, then later you have Bank of England Governor Bartley's speech at 11:15 p.m. Singapore time, and thereafter will be a rather quiet session throughout the day. So it's more of a ECB official and BOE official speech later throughout today's session. All right. So with that, thank you for your time and have a great day ahead, and we shall speak again tomorrow.